We are live with another Quick Tip Tuesday, each and every Tuesday at 8 p.m. Eastern Time. Today's topic is bridge loans. What is a bridge loan? A bridge loan is basically kind of how it sounds. It helps you as a bridge that helps you to get to the other side. So basically, if you're in the process of selling your home, it's listed, but it's not under contract yet, but you're trying to buy another house. If you have enough equity in that house, you can actually get a interest-only loan that basically backed up by collateral, basically that real estate, that piece of property, and use that loan to purchase your next home. So there's good and bad towards bridge loans. If you definitely have, there's a lot of things needed for a bridge loan. Bridge loans are used actually more than you think, especially a lot of people now are taking advantage of selling their house and maybe buying a bigger house, maybe expanding, maybe downsizing. There's a lot of different reasons people can definitely buy or sell their house, sell their home to get another home. Growing family, maybe their kids move out, they need to downsize. So a lot of people can do a bridge loan because a lot of people actually do have equity in their home, and they can use that equity and get a bridge loan and then purchase the next house. And then when your first house sells, you can actually get rid of that bridge loan. So a couple things to keep in mind. Bridge loan is a temporary loan, typically 1 year or less, depending on your scenario. Bridge loan is an interest-only loan, so keep that in mind. You're never gonna pay any principal down. You're only paying interest on the loan itself. You need to have good income, good credit, so you can't really maximize your budget. In order to get a bridge loan, you typically have to have, they're very tight on the debt to income ratios. They're not as lenient as like conventional or FHA. So keep that in mind. What's going on with bridge loans? Let's see. Interest only. And when you're going to buy the next house, they take that bridge loan into consideration because it's technically not paid off. So you really have to have a very, very strong income and a very strong credit. Do I need good credit for a bridge loan? Yes, you typically have to have close to A1 credit in order to get a bridge loan because you're gonna have multiple new debts going in place. You have to have your current mortgage for your current house that you're selling. If you have a mortgage, you have to get a new loan, interest-only loan. And if you're gonna go buy a house, that house also take into consideration that loan because you're actually making payments and you haven't sold that house. Yes. Another question: do they have amortized bridge loans? Bridge loans? No. So bridge loans are interest only. So you typically can get an amortized bridge loan because it's a short-term loan. It's typically 1 year or less. You're basically need a little boost to get to the next house. So with a temporary loan, you don't want to they don't want to lend that forever. So it's a interest-only loan. And once you sell the previous house and have the equity, you can pay off that specific bridge loan. Bridge loans has many other names. Can be called gap financing. There's a lot of funky names to it, but at the end of the day, all the same thing. Let's see what else I wanted to cover with bridge loans. It's a temporary loan. It's actually used more often than you think now, especially now with everything going on. Well, it's always being used when someone is selling and buying a house. Typically in this market now, maybe people won't need a bridge loan because of the house is selling so fast. But in certain markets, there maybe like in the more expensive markets, sometimes those items don't sell as fast. So you would definitely see a bridge loans in those markets as well. Good credit, low debt to income ratio, is backed by collateral. So that's your current real estate is backed up. And yeah, that's bridge loan. So I'll probably take one. If you have any other questions, I know a lot of people have some questions. Any other questions before I wrap it up? Bridge loans. If you can, definitely take advantage of bridge loans. A temporary loan. If you have all your cash tied up either in investments or other scenarios and you don't want to use it, bridge loans is definitely the way to go. It's a short-term loan. You're basically paying it off when you actually sell your house and buy your next house. You can take advantage and actually buy that, maybe your next dream home or the house you always wanted before it gets out the market. So it's definitely a good thing to do. So with that being said, I don't see any more questions. Great, thank you so much. Yeah, anytime. That's what I'm here for. Everyone, have a great rest of your Tuesday, and thank you for joining. If you have any other topics you want me to discuss on next week's Quick Tip Tuesday, just shoot me a DM on my Instagram, JonDoesRealEstate, JON does real estate, and sign up to my newsletter. Link in my bio. Have a great night, guys.